like to go give an overview of cash indexes, which is SPX, S&P 500, NASDAQ Composite, and Dow Jones. And we'll take it from there to give us a better picture where the markets are and how the strong market is looking and what could be the possible future trends that indexes can make. And then, of course, that can help us to guide the individual trades that we are looking if it is in the right time at the right place. So, having said that, Thursday's action, which started the downtrend at around 1 o'clock, when the news came out from Bloomberg that Biden administration is going to increase taxes, and we had a complete sell-off during that day. However, the market on Friday negated that news and actually made a new high, uh, completely erasing that losses, and which is very, very bullish. So market is definitely very, very bullish. The other bullish thing that I see, that market has been consolidating at the higher end. So if you look at it, market has been consolidating for last 5 days, almost like a week. It has been consolidating, and it has a further potential of going up, breaking out of this trend and going to make a new high. So having said that, uh, there are other indicators which are contrarian to the bullish trend. So if you look at RSI, which is not making new high, but actually it is going on a downtrend. It is making lower highs. Even though the market is making new high, RSI is not making new high. On the other hand, MACD, another indicator, is showing that the selling pressure is getting less and the buying pressure could increase. However, it has still not crossed the other line. So that could be a potential that a market is still in weakness, but it is still showing that it is very bullish. And then the other indicator, stochastic, is showing that the selling pressure is over and then the buying pressure is there. So these are contrarian indicators which are playing in the market right now. So I call this market in a gray scale. Market has a potential to shoot higher after breaking this trend, and it can come back and test that trend and then this breakout resistance and then march higher. So that is a possibility. Okay, so this is very, very strong. But if you look at the other possibility where I feel that market is overbought is from this Friday's close to 50-day moving average. If you really see, the market is overbought because you can see the extension from 50-day, it's almost like 100 to 120 points, correct? And now if you go back, every time that extension has happened, market has a tendency to pull back. So if you look at here, for example, if anywhere the market has gone, it is not able to break through about this much distance, and it has always come back down from that high. So if you see, market has already been overbought from 50-day moving average, so it cannot continue going up like that. But again, market can remain irrational, then we can remain solvent, correct? So there is no way we can say that top has reached and it has a potential. So if you see here, there was an extension where the market was overbought. But what did market do? It gave 50-day moving average to breathe, and it was consolidating before it tried to break out. But again, the breakout failed and it had to come back to retest its 50-day moving average. So having said that, that is a very, very big possibility that market is overbought and could have a potential to come back. So my understanding is that this breakout can create a FOMO trade, fear of missing out, and um, capture the uh, latecomers to the party, and then can come back to pull back. So having said that, this is one way of looking at it, but all the other indicators that market looks very, very strong, correct? So that's one. And now we go to weekly chart on what does the weekly chart says, correct? So if you look, these are regression lines, which are called, I call it, where the follow through day happened on from COVID low in April, I believe, or March 30, when that follow through day happened till this week high, correct? So when you look at S&P is in the top range. So there is a potential when I say that the market could break out, market could try to and possibly come up to 4,300 level, which is almost like 120 points above, try to touch above this line. So there is a possibility of market going through, but to me, the risk is more there than the reward. So I rather wait for the market to pull back. But there was an interesting pattern that I witnessed in this chart, which is very, very bearish for me. And I would like to show, again, I'm not saying that the market is bearish. Overall, the market is in a bullish trend, but bearish in short term means I'm waiting for a pullback where I can get entry into longer positions if I want to get, correct? So that is what I meant. Not saying that I'm bearish on market at all. No, market is very bullish. But if you see on weekly chart, the candle that has created is called hanging man candle. This is when the last climax or buying pressure happens, and when all the selling is negated and all the buyers come in, and this has created a hanging man who's just at the very top of the candle. Now, that is not just one indicator to confirm that market is overbought or is about to fall, but we need to have other indicators also. So if you look at RSI, RSI is also in overbought area. And also if you look at stochastic, which also oscillator, which also shows that market is overbought. But as I said, market can keep pounding higher or grind higher because market can remain irrational. But these are sign of caution. Why I say this? Because if you see in previous May 19 chart, this is the same pattern. So again, I would like to show you hanging man, RSI at the top, stochastic at the top, correct? So three indicators are showing that market is in overbought area. Now, if I go back to May 19, which is pre-COVID era, and that is the same pattern that has happened there. You see, it's a hanging man, correct? RSI almost to overbought, stochastic overbought, and MACD also showed that it was overbought. As you can see, the buying pressure was diminishing. So there is a potential that market could go high and could fall down for a pullback. And that is what we are expecting to get into the trend where market is pulled back. So to me, that is a sign of caution, correct? But so if I am going to make any new trades, the reward for me is very less and the risks are very high. So I would rather wait for a pullback and not jump into this breakout and try to achieve the trade. And most of the other ratios that Hemal had shared earlier, that margin debt, bullishness among all the analysts and writers, they newsletter writers, they all are very high, above average trends, and that also is showing that the market is calm and it's very overbought. So there are chances of pullback, but as I mentioned, market can remain irrational and it can keep going higher. But as a trader, as an investor, we should always think that is it worth for us to take that risk, and that is how it is. So of course we can make in and out trades because some stocks might be setting up in basis and have a chances of a breakout. But those breakout will only work if the indexes do support them, correct? So this is a thing that we have to keep in mind. Now let's go to Dow Jones, correct? Now if you look at Dow Jones has made even a very strong weekly candle which is in red and which is hanging man. And that also is a very big concern for me, because if you see right here, this is an hanging man in red color. So it is showing that there is a possibility of a trend reversal. Okay. And again, when I say trend reversal, doesn't mean that the market is bearish. I am expecting a pullback. But if you see here, MACD is also showing that buying pressure is reducing. RSI is not making new high even in weeklies, as Dow Jones is trying to make new high. And then also stochastic is also showing that the buying pressure is reducing, correct? So what all here in Dow Jones, all four indicators are showing me that market is overbought and has a potential for a pullback. Now, how do I confirm this, correct? So when I go back again to May 2019 before COVID, correct? So there also we can see that Dow Jones made red hanging man candle. MACD was again overbought, correct? You can see buying pressure was reducing. RSI was not even at high, but it was not able to make new highs into. So the index was showing that momentum was flattening out, if you see here, correct? And if you see stochastic also was showing that it was overbought. So all this pattern had happened before, and in our technical analysis, we take into consideration that pattern repeats itself, whether it's in bullish or in bearish way, correct? So to me, these are sign of caution. However, in daily chart of Dow Jones, it's very different. Correct. So let's look at it. In Dow Jones, market is at high. Correct. It's not able to break, so it's consolidating. And if you see, it has been consolidating in this range for a long time. So again, if you see RSI is not making new high, it is going down, it's making lower highs. Correct. And if you see stochastic also, it's going lower. If you see MACD, it's also going lower. So if there is any breakthrough, it could be temporary, but it is better for us to see a little pullback. Not saying that, oh, it has to pull back a lot, but 2 to 5% or 2 to 5 to 7% is healthy. If it can hold or at least be around 20-day, that is good. Or it can come and try to test the 50-day and do that. That also is absolutely fine. And that does not break the overall bullish trend. It is healthy for market to digest and test this moving the averages in order to take this leg up further. Correct. So there is a possibility, but however, NASDAQ has a very complete divergence than both of these cash indexes, which is very, very interesting for me to see that NASDAQ is showing more bullish strength than the other three indexes. So if you look, this was all-time high, and it was not able to break that all-time high. And from there, it failed and it went down and a pullback, which is very nice, which was very healthy. But if you see now, it has been consolidating in that resistance area of previous high, and it has come, the Friday's close has been in that resistance area. So there is a possibility till Monday, Tuesday, the market can stay in this resistance area. And I believe that after Google's result on Tuesday, there is a huge potential for NASDAQ to have a breakout here. Why I say this? Because it's already testing its in resistance area and it is playing in that area. So there is one bullish sign. Second, the MACD is showing that the buying pressure is increasing and selling pressure is going. And if you see, RSI is trying to make new highs. Okay, if you see from previous low, it has gone up to previous high. So it is breaking that trend line, but it still needs to go above. So the relative momentum in NASDAQ is showing weak through the RSI. However, stochastic, the other indicator, is showing that the selling pressure is reducing and buying pressure. So to me, with RSI pointing up, stochastic pointing up, and MACD pointing up, has a huge potential for NASDAQ to break out. And if you see, NASDAQ is not overbought from 20-day moving average and 50-day moving average. It is considered in normal. Where you see here, there is a huge gap from 50-day to all-time high from 20 days. So NASDAQ is not overbought and it has a potential. But again, the weakness over NASDAQ is that the RSI momentum is not supporting it in a daily chart. However, we go into weekly chart. In weekly chart, if you see that NASDAQ has been consolidating in this range now for 2 weeks, correct? It is closing into that resistance area. And why I say this, because you see RSI is not making new high, even though it is coming into resistance. What we want to see is this RSI has more room to reach to break this new high level, correct? That is why I'm saying that I am bullish on NASDAQ, because NASDAQ has this much room for RSI momentum to increase there. So NASDAQ is divergence showing me that, and it's very, very bullish. So we'll have to see next week, and this will also give rotation to play, because all the time Nasdaq was going down and was not participating as S&P and Dow Jones were making new high. So there could be a rotation, but this rotation again can last very short period of time until the earnings season. And then again, the reality will come as the reopening is happening and yield are going to rise. It's just a matter of time. So again, these trades you will have to manage according to your risk and how fast you can take into position. Hopefully this video can help you to make your trades better. and guide you into your direction of how you can make the trade. Last but not least, I will close this video with one buying opportunity in DraftKings, which I think has set up for a very good uh, possibility of a bounce from the support. And I'll show you why, what do I mean by that, and it's potentially short. So if you look, DraftKings was not able to, the biggest resistance from DraftKings was from here, previous resistance. So, sorry guys. So if you see that from the last breakout, which was right here, where DraftKings was hanging around here and was not able to make new highs, correct? And it broke out from that channel right here with a gap up. And then it tried, made a new high. It retested its breakout, and then it shoot up new high, and then again it tested. But if you see, it tested because the body has always closed above that resistance, previous resistance. Now that has become support, and it has gone up high, and it is making new higher highs, correct? So if you see, it went low here, it did not break that low, so it is making lower, higher lows, and then from higher lows it is making higher highs. Now, if you see, it has already come down into the support of the previous high right here, which is the resist support now. So DraftKings has already a potential to become into that, how can I say, testing the support, and it has a very, very strong potential that it has tested that resistance. Now that has become support, and it has already breached once. It has already come back and tested that support, and now it is showing that the buying pressure has increased here. So I believe that Monday or next week, if it can make another green candle, or if you buy above first 5 minute high, it's a great potential. So stop loss can be set from the previous resistance. So we can have a stop, which would be around, say, $49, correct? That could be our stop, which is around 200-day moving average. And the potential for the stock to go up is to break 74. So I believe that in the risk to reward ratio is very, very good and favorable. And I think DraftKings has set up for a next leg higher. So my buy point will be first 5 minute high from Monday opening, or if it takes out Friday high and it opens up there, then also can be another valid entry. And then just monitor for it to continue going higher. That's what I believe till the earning. That's it. Hopefully this helps. And if you have any questions or comments, and of course, please do your own research and due diligence before making any trade. But this is what I think that is set up. Thank you.